Hello, ladies and gentlemen, and welcome to episode number 6 of our SANAD Does Fintech webinar series. Today, we're going to be tackling the topic of new models of financial technology, talking about different ways in which fintech has evolved and the differences between fintech and simply taking a traditional financial service and making it digital. And we are extremely fortunate today to have with us Katarina Morton from Finance in Motion, who administer the fund. I'll pass over to her now to tell you a little bit about how they're doing that.
Thank you, Ian, and welcome everyone to the final webinar in this webinar series that we've been conducting over the past couple of months. Yes, you've seen from the video, the SANAD Fund is an impact investment fund that operates in the Middle East and North Africa and Sub-Saharan Africa region, and provides debt and equity financing to MSMEs via qualified financial intermediaries. So we work with banks, microfinance institutions, leasing companies, and others to provide this much needed financing to micro, small, and medium enterprises. Parallel to the fund, we have the SANAD Technical Assistance Facility that supports the mission of the fund and provides capacity building to the institutions into which we invest as a fund, and also promotes the development of the financial and entrepreneurial ecosystem. So we work with a variety of sector institutions, again, to support MSME development in the region. Again, recognizing the importance of that fintech can play in facilitating financial inclusion, we developed the webinar series, and yes, very much looking forward to today's discussion with our experts. Thank you.
Lovely. Thank you very much, Katrina. That was very useful to understand, and we've appreciated the support that SANAD provided for this whole series. Our topic today then, it focuses on how fintechs today quite often have unique pricing structures, customer acquisition structures, and ways of designing and developing their products that better suit their clients than traditional financial services ever could. We're going to ask our panelists to talk about some examples that they've personally been a part of, and those that they've seen in the MENA and Sub-Saharan Africa regions. We're also going to look at how perhaps those regions can jump ahead of the rest of the world. And we're going to talk through some real life examples. Towards the end, we'll be taking some of your questions and putting them to the panel. You can give us those questions at any point through the Q&A function, which you'll find at the bottom of the screen. And if you want to tweet about the event, please use the hashtag #SANADDoesFintech. I'm now going to pass over to our two panelists to very briefly introduce themselves. I'll start with Shazan. Shazan, if you can tell us just very briefly who you are and what you do.
Yep. Hi, my name is Shazan Amici. I am currently an entrepreneur in residence at City Ventures in London, primarily working with the D10X team, which looks at incubating and launching new businesses across the City franchise. I've started and sold 4 businesses over the last 20 years across different verticals. The last business was a business called Beam Wallet, which was a payments and rewards business that we sold in 2 tranches, one to Majid Al Futtaim and the second to Zip, which is a listed Australian BNPL provider.
Fantastic. So I'll now introduce somebody who I know very well, actually, because I've recently joined the same company as Nabil a few weeks ago. So I have the pleasure of calling him a colleague as well as a guest on the show today. Nabil, perhaps you would be kind enough to introduce yourself.
Thank you, Ian. Hello, everyone. I'm Nabil Tabara, currently looking after strategic partnerships at Nimcard. I started my career in banking, 20 plus years, and then joined Visa for 6 years. So it's a combination of banking, finance, and payments technology. Here I am.
Fantastic. Thank you very much. So we'll move into our discussion now, if we may, gentlemen. I've got a number of questions. I'm going to start, if I may, with you, Nabil. As I said, you and I are now working together at Nimcard. Not everyone will necessarily be familiar with the business. perhaps you could talk through some of the problems that Nimcard is solving for and tell us a little bit about the organization.
Sure. So basically, the interesting part is that Nimcard is a fintech by itself and a startup company by itself. The main thing, that it's trying to solve for is trying to remove the friction, around issuing payment credentials across multiple markets. So it's the only banking as a service platform within the MENA region that is built on open modern API technology, offering like issuing and processing services among other capabilities, including KYC, fraud management, ID validation, all the required verticals to be able to issue card programs. And our main objective is actually to remove the friction, to enable fintechs to build their card programs and launch across multiple markets at a record speed. And starting with BIN sponsorships that are an essential and key element to be able to kickstart any business in any of the markets within the MENA region.
Fantastic, thanks, Nabil. And Shazan, an unusual order of operation in my mind for you. You say built and sold 4 businesses, and then decided to go and work for a large bank, which is usually rather the other way around. Talk to us a little bit about what's attracted you to City Ventures and what you're doing for them in a bit of detail.
Yeah, so it's probably a roundabout way, but the interesting thing where we sit across the bank is looking at high risk opportunities that are outside of business as usual. So that's what's the most interesting thing, that we can do stuff that can't sit within a specific business unit. We work primarily in the institutional clients group, which is the part of the bank that serves large corporates and financial institutions. And so it's an interesting place to sit because you see a lot of, there's the top of the funnel is fascinating in terms of problems or ideas that you see from across the client franchise. The ability to speak to clients is interesting as well, because interestingly enough, the more you speak to clients, the more you understand their problems and what problems you're looking to solve. And then, testing a proposition within the City franchise is another interesting place. So 3 reasons why I'm there.
Excellent, okie dokie. And I always think that these big Wall Street banks, they're facing, if you read some of the articles and you listen to some of the podcasts, these guys are facing an immediate existential crisis. They're going to be wiped out by crypto in the next 6 months. Bitcoin is the future, etc. Maybe it's not as extreme as that, but how do big banks like that hedge against that possibility?
By standing up innovation teams that allow them to do things that they can't do within business. So I think that part of that is the ability to kind of take on high risk stuff. I think, interestingly enough, this question of this existential threat faced by crypto and DeFi is an interesting story. When I've been there, I've been at Citi for 15 months. So when I first started there, people said, "Don't talk about crypto. They'll think you're a religious fanatic." Right. And in the last 15 months, now only people want to talk about crypto. So I think that interestingly enough, some of these banks recognize that we've crossed the Rubicon in terms of the tipping point against some of the adoption of some of these technologies, and they're interestingly enough seeing the opportunity more as well as a threat, right? Because the inverse of the threat is an opportunity. So I think they are beginning to embrace it and look for opportunity in terms of how they can take a pretty powerful client franchise, and one of the biggest attributes that they have is this question of trust, right? And how to leverage the brand and trust that they've built up over hundreds of years and take it into a new market.
Fantastic. And Nabil, just on the kind of question of existential threats to banks, you know, there are those that would look at banking as a service providers as Nimcard is and say, well, you know, okay, that's a threat to every bank. But of course, we also know that without those banks and without partnerships with other financial services, what we're doing doesn't make any sense. So how do you see that balance between the two of, on the one hand, you have an element of competition, on the other hand, it suits everybody to work together?
Yeah, so we've been seeing a lot of banks, attempting at modernizing and transforming, their business model. We've seen, banks bringing in chief digital officers, chief innovation officers, and forming large teams with clear digital roadmaps in order to really transform. Banks are still required because banking as a service is basically taking the banking services and offering it to non-banking players, which are fintechs and neo players out there. So will banks be able to be the route and the platform to do that? Maybe yes, maybe no, but there are other solutions whereby this can be delivered through partnerships. And the only way I can see it, and I can tell you based on my experience in interacting with banks around the region for the past 6 to 8 years, is that the only successful model will be based on collaboration and partnering between banks and fintechs. This will bring bigger scale and bigger success. I know each one would like to succeed on their own, but things seem to be coming, naturally together to complement each other. This is how I see it in my view.
Yeah, no, absolutely. Nabil, you worked for Visa for many years, as you said in your introduction, and you will have seen, of course, during that time, a great number of fintechs, come across your desk, as it were. What are some of the more interesting models that you saw there, and what was it about those companies that really piqued your interest?
Yeah, so we've actually interacted with many type of fintechs and many use cases trying to solve problems around SMEs, youth banking, corporate expenses, neo apps. The common challenge, frankly, is that even with the schemes, they have a lot of digital capabilities that were not being able to be passed on to the end users like fintechs and other neo players, because there has always been a gap in the middle for someone that can solutionize, that can take these digital capabilities and offer it in a ready type of solution to make it faster and easier. So we started seeing a lot of such players, whether in the form of an enablement, playing an enablement role or an aggregation role. And I think this will accelerate the adoption between fintechs and the schemes in general.
Yeah, absolutely. Shazam, one of the models that you touched upon, in your introduction, and I don't know that I'll say it's a completely new model because, financing for purchases has existed for a long time, but it's being deployed in a new way, is buy now, pay later. Do you believe that's sufficient as a business to actually be a full business, or is it a feature of another, payments facility of some type, or a different fintech of another?
I don't think it's a business; it's a feature. If you look at the evolution of lots of these guys, and I know Zip obviously very well because I sold a business to them. We spent some time with them. I've looked at we launched a business in Sweden with Klarna. So I've kind of spent some time looking at these and working with these businesses, and and looking at them. Afterpay selling itself to Square, they did that for a reason. They did that because they knew where the writing was on the wall in that business. They knew that in order to have, it's interesting that the real, and Klarna Klarna is not a buy now, pay later. It's a customer acquisition and retention tool for merchants. Yeah. So you've got to think about the frame very differently than buy now, pay later. And I mean, if you look at MasterCard now, you know, Nabil is probably more of a favor with this, but MasterCard is offering BNPL out of a box as a service now to its customers, right? So, you know, I think the form factor of consumer credit makes no difference. It's just a question of how it's packaged and how it's delivered. And I think the challenge also with BNPL customers is all about retention. You know, it's very, the BNPL proposition makes sense for certain use cases and certain spends, but you know, on regular spends, on frequency of spends, I think there's a challenge in terms of demonstrating the value for the BNPL proposition. So I think that the Afterpay guys are very smart, very, you know, they sold at the top of the market, and they did a great deal for themselves, because I think that they saw where this was heading.
Yeah, no one to hold them and no one to fold them.
I mean, you know, knowing when to exit is as good as knowing when to start a business, you know, and I think that, yeah. So I think sorry, Ian, but just my final point on this is that just the packaging consumer credit and offering a simpler, lower cost proposition to credit card debt is the problem which the BNPL guys were solving, but there are other ways to solve that as well.
Yeah, and I saw something I think on the BBC the last few days, and it was talking about a potential use case: buy now, pump later. So you could get BNPL on your petrol. Yeah, and I thought that's interesting, but to me that is a worry. It reminds me in many ways of the kind of more predatory business model we saw with companies like Wonga, you know, years and years ago, who for a while were the darling of the British political scene, and yeah, everyone wanted to talk about what a great fintech they were born in the UK, and then obviously at a certain stage had a sledgehammer taken to them, basically. So how do companies, and I'm thinking here not just in the developed world, but actually in countries that are in the process of developing, and obviously the MENA and sub-Saharan Africa region is a mix of both. How do they avoid that predatory component? How do they ensure that they are pricing in a way that allows them to be profitable, but not in a way that is harming their consumer in the medium to long term?
So, you know, there was actually another interesting article the other day that I saw on the Wall Street Journal, or in the FT, I think was it, about the level of UK consumer credit card debt is at its highest level ever. And because of inflation, that people are having to rob Peter to pay Paul in order to maintain a standard of living. So I see that challenge, right? So, you know, the only way I could suggest that in terms of businesses to behave responsibly is that if you kill your customer today, you won't have them tomorrow. And so I would say that not only should obviously there should be an altruistic element to it, but there should also be a solid commercial sense to it, right? In terms of maximizing the lifetime value of the customer over a period of time, rather than trying to exploit them and trying to gouge them in the short term. So I would say a combination of doing what's morally right, but also perhaps what's right from a commercial perspective as well.
Yeah, and we're touching here a little bit, Nabil, on different models of pricing. So there are a number of them, microservices being one, which obviously you have now considerable knowledge of. Why do you think that these, or do you think that these new models of pricing are superior to what traditional financial services have been using? And what is it that exists now that didn't exist when traditional financial services came about, that's allowing them to be properly administered?
So the way I look at pricing, as Shizan was also saying, it has to be sustainable. There should be no immediate gains. There should be some sort of self, containment and responsibility from the players. It has to be simple, and it has to be attractive to consumers. The sustainability of these programs will determine the success going forward. Maybe at the moment we're still at the beginning, but time will tell, you know, if this is really going in the right direction or not. It has to work for everyone, all stakeholders involved, whether it is on the merchant side, issuer side, fintech side, client side, they all need to win together. Otherwise, it will be killing to one of these four parties. This is how I would put it, frankly.
Excellent. Well, so we're now going to go to the audience. We're going to give you a poll and ask you to give us some of your thoughts on a few questions that we've pulled together for you. You'll have a few minutes to do that, so please do take a look and tell us your thoughts. Whilst the audience look at that, I should also say, please do send in your questions for the panelists later on. We'll be coming to those towards the end of the webinar, as I said at the start. We've talked about a number of different models here and a number of different parts of the world, particularly MENA and Sub-Saharan Africa. One of the challenges, particularly in the MENA region, is, or can be, that there are many different regulators, sometimes in the same country, and you're not talking necessarily about, you know, large population sizes in every instance. So how do you think companies can account for that, Nabil, so they're able to find the scale they require to be, you know, reasonably profitable, generate returns for their shareholders, and as we say, do that without killing the golden goose, if you like, by exploiting their customers in the short term?
Yeah, so the fragmentation within this region, you know, is among the biggest challenges that fintechs will be facing. Because imagine if you want to operate in one market, you need to fulfill the regulatory requirements and be able to solve for all other required verticals in that market. If you want to scale to other markets in the region, you need to duplicate these efforts. And these are just killing, you know, for any fintech or startup. It's time consuming, it's costly, and it's not, you know, effective. So this is what at least we're trying to solve for, and removing this friction as well, by trying to incorporate ourselves and make those arrangements readily available across multiple markets to make it much easier for fintechs to be able to scale among several markets within the region. Unlike like US or Europe, you get one-time license and you cover huge markets, you know, which makes a big difference. So it is a challenge. We're trying to solve for that, and this is among the frictions that we're trying to solve for as well.
Yeah, I know that obviously regulation is fairly regularly, you know, held up as one of the things that can stifle innovation. I don't think that's been the experience for most people here in the UAE. The government's invested, you know, very heavily in innovation in any number of ways. Do you think there are particular countries in the Middle East that are excelling in kind of creating the right environment from a regulatory perspective to encourage fintechs to start up there, or to have their head offices there, or to offer their services there? Sorry, Shazan, that one is for yourself.
Yeah, I mean, the challenge, I think, is navigating the regulatory maze at the moment is a bit overwhelming, right? I mean, if you look at the UAE alone, you've got how many different regulators offering some sort of crypto native solution. You've got DWTC, you've got DMCC, you've got ADGM, you've got DIFC. I mean, I don't really understand how you pick and on what basis where you go. So I think everyone is really being super aggressive and super forward thinking about it. But I just think that it's overwhelming in terms of opportunities. I mean, Nabil, you probably know. I live in London now, so I come back between the regions. So I'm currently in Dubai, but I watch it. But Nabil, you probably have seen it more than I do, and it's just a little confusing from watching what's publicly being announced every day in terms of how these different regulatory regimes operate. Where do you go to do what is an interesting problem to solve.
Absolutely, I can add on that. If we look at it holistically, right? So we really started seeing a lot of advancements in the region. So in the past year, the number of new regulations that has been issued across multiple markets is really massive. And it's all to support the fintech ecosystem. We can also see the number of large amounts of funding that is happening. So this will definitely support and trigger more innovation, more fintech enablement sooner than later. Like, for example, funding was around $100 million in 2015. Imagine that in 2021, it reached 2.6 billion, 25 times, in 6 years. This is really massive. This will create a lot of innovation, in my opinion. And imagine also like regulators moving towards open banking. We've seen announcements from several central banks around the region. This will again bring with it a huge wave of innovation, and it would be quite interesting to see how the things will really be happening in 22 and 2023. I might say.
Yeah, and we talked, as I say, about the fact that there are some developed and some developing nations in this part of the world. Population-wise, of course, a lot of the larger population centres are in the developing part of the MENA region. How do those countries regulate or legislate in such a way that they allow themselves to leapfrog some of the the innovation that's happened in the developed world over the last 5 to 10 years? When I look at, for example, PayTM, or I look at M-Pesa, you see products there that are well ahead of where the developed world is, one might say, from a user-based perspective. What can they do to create more of those situations, do you think, Shazan?
Well, they did it without a regulator getting in the way. I think that's the point, right? I mean, I think both those entities are regulated ex post, right? They solved the problem. They identified a problem, solved the problem, and the regulator didn't get in the way. They let the innovation happen, and and unfortunately there wasn't some egregious market failure, and they regulated ex post. And I think that. I think the light touch, I really believe in the creative destruction of the market, and that process is creative destruction. And so, I'm a bit of a libertarian, or a crypto anarchist at heart. And so I just think that the best that the regulator can do is to stay out of the way and let innovative, young, hungry people, not necessarily young, I'm not anymore, but young, relative, hungry, innovative people to go out there and solve big problems, and then just put the guardrails to make sure they're not these incidents of predatory lending. They don't take advantage of their oligopolistic or monopolistic market position. I think that those are the more important things. That there's fair and open access, that people's information and data is managed responsibly and safely. These are the large existential issues that the regulation should address, rather than in terms of getting down into the weeds that I want to encourage this sector and drive that sector. I just think that I think the regulators they do better by doing less rather than doing more.
Fair enough.
So Ian, leapfrogging is really very important, and really learning from successful experiences is required, because you can a lot of regulation also creates confusion. And as Shazan is saying, we've seen a lot of like smaller markets, because the regulators are usually control freaks. So smaller markets regulating like on-soil deployment, thinking that this is what will create security. And then they don't realize that it ends up not being feasible for players to really approach the market. And they would be killing the innovation indirectly, while that was not the intention. So leapfrogging and regulators mainly putting a framework and some control benchmarks is important, but not really getting deeply into how to do it and how it should happen.
Yeah.
Remain controlling, you know, the overall framework, but not getting into these details, and really be open about, you know, discussing it with the stakeholders to ensure that it ends up with a positive result to the country.
Yeah, somebody said to me a framework rather than a cage, which I thought was rather droll. You said, Shazan, a couple of times that you're a bit of a crypto anarchist. A crypto anarchist working for a large bank. What's the role, do you think, of big banks in a decentralized finance world?
Yeah, it's interesting. I think that they, you know, they're still gatekeepers for large pools of capital. That, you know, that if you want to access that institutional investor, you need to still work with a large regulated entity in order to be, because they have their own compliance requirements, their own prudential standards and regulatory requirements in order to do that, right? And so you need, and for better or worse, until that regulatory regime changes, then that is the way that's how capital is still deployed. And I mean, you know, the lack of a Bitcoin spot ETF in the States, for example, the SEC is refusing to license or regulate a Bitcoin spot ETF, is a really interesting example of I just think that it's just an example of a regulator that's behind the curve there, that the market is, and this is a question of the regulator, this is a really good example of a regulator choosing a particular path that forces people down a suboptimal outcome. I can talk all about this. I've done a lot of work on the inefficiency, and so I think banks have an important role to play because they are still trusted gatekeepers, and that regulatory regime is still an important layer for many people when making a decision.
Yeah, excellent. So that obviously gatekeeper role, as you rightly put it, is that, and I know you're going to have to be a little bit careful how you answer that, is that being used as a force for good in the world, or otherwise in terms of innovation only? I'm not asking you to pass any moral judgment on those.
Well, I don't even know. It is what it is, right? I don't look at it as good or bad, Ian. I mean, you know, the regulatory regime that we've built up has been built up over thousands of years, right? In terms of fiat money and gold, has been built up over thousands of years. You know, what we're asking to do in the last 5-10 years, I mean, you know, when I bought Bitcoin in 2016, and people were looking at me like I had a third head at that point. So where we've come in 6 years is unparalleled. So I just think that it is what it is. And I don't think it's good or bad. It's just a function of time and adoption and people getting used to a new way of looking. A new paradigm takes time to sink in. But you know what Victor Hugo said, that nothing is more powerful than an idea whose time has come. And I think that that's where we are with the adoption of some of these decentralized business models.
Sure. So I know that if I ask you, Shazan, what technologies do you think are going to disrupt us, I get the strange feeling that it's going to be something about DeFi or crypto. So I'll ask.
No. Go ahead, Nabil.
Yeah, what new technologies do you see changing things up, Nabil?
So I was also commenting on Shazan's point in terms of we also need to look forward towards the impact of central bank digital currencies, which haven't come into play yet. And we know like there are like 80 central banks around the world looking at CBDC. So yeah. I don't know what this might do in terms of digitizing again, you know, currencies and impact on crypto, so on and so forth. So this is something really interesting to look forward to.
Absolutely. Anything outside of the crypto world that you want to throw out there, Shazan? Is it artificial intelligence, something else?
You know, I think one of the things that is interesting is, you know, AI is an overused term in every context, right? In terms of, so I just think that, but I think this opportunity for machine learning, which I think is AI v1.0, is interesting. I think the more powerful thing is about this democratization of access to finance, and I think this is something that perhaps SANAD is kind of why part of SANAD's mission, right? In terms of making finance more accessible, more open to anybody. And I think the open banking is still a really powerful thing, I think, you know, and I think that it's implemented properly can unlock a whole bunch of business models underneath it. So I don't think we need to go as far as crypto in order to kind of show people have access to a democratic finance system. But I just think that if open banking is already part of that journey, I think. And I think that is really a powerful thing that unlocks a lot of value and a lot of new ways of looking at problems. So going from closed ecosystems into open ecosystems, I think is huge.
Yeah, that obviously has some impact on the way that we think about, you know, things other than just the security of the actual money in the system. You know, data being a very obvious component of that. Nabil, talk to us a little bit about, you know, how you address some of those concerns. We're obviously, as you've said, licensed, and therefore we know we bear a compliance burden in that space. What are some of the smarter ways that more agile fintechs can ensure security and ensure that they're also being compliant with things like KYC and AML that don't involve just replicating a traditional bank's compliance department and information security department?
Yeah, absolutely. We're also seeing a lot of fintechs coming up in the space of, you know, providing such services from a B2B perspective. So they are able to provide eKYC, ID validation solutions, and things that are smarter in terms of ensuring the security of the consumer than the traditional ways of doing it that banks still use today. So innovation is happening at multiple fronts, and the aggregation model, in my view, will help serve the fintech ecosystem at large, because it will facilitate and, you know, reduce the integration timelines required, and again removes another friction towards the journey of embedded finance that Shazan was indicating. So embedded finance eventually will allow any player in the market to provide financial services. And this is the whole thing around open banking. So it's not going to be restrictive anymore to banks, yet the relationship and the partnership with the banking partner will still be required. I was talking to some provider, you know, just before the webinar, who was showing me how they use like location intelligence to determine the frequency and the stores by name, by shop that any individual visits, and the data that this can provide in order to trigger usage experiences, behavioral driven and predictive driven you know, experiences, you know, that will make every individual feel that he's getting a personalized offer or a personalized, you know, message. So the power of innovation and technology is really overwhelming, and I'm happy to see so many players innovating in multiple verticals around the whole financial ecosystem.
Yeah, excellent. So I'm going to cut very quickly to some answers from the poll that we put to the audience. Now, one that struck me, we asked what they thought the biggest obstacles to innovation in fintech were. And the first answer I put down on that poll was regulation, and I expected it to be a slam dunk. But actually, the audience feel that a lack of understanding from venture capital is actually far more damaging. Shazan, you obviously raised money, a lot more than once. How do you feel about that? Do you think that's true? Is there a lack of understanding? Is it changing as we see fintech become far more mainstream?
I think that may have been true historically. I think that perhaps we're seeing dedicated pools of funds to fintech spaces now, right? I think there are lots of specific funds being raised for the fintech. I mean, historically, the region has been too small, right? So it didn't make sense to raise a sector-specific fund for this space, but I think that that's changing. So I would have thought that sectoral specific funds would have perhaps addressed that question of not understanding the particular challenges of the fintech space. And I think also increasingly the number of global investors who are looking at the region who also have a sectoral bias would be, because there are so many dedicated fintech investors globally now that would be kind of willing to deploy capital into the region. So I think if you feel that if you're the venture capitalist you're talking to doesn't understand fintech, then I'd suggest you go talk to another venture capitalist. Right. There's probably one out there. There's probably one out there who will understand it.
There's plenty of them. That takes me to another point. Actually, I raised it a few months ago. We were talking about raising capital, and Jenny Alzain, who's a fantastic. I won't say VC because she was in VC previously, and she now provides alternative methods of financing. But she was talking about the kind of glut of money that we're seeing, and the fact that VCs are looking to invest more and more and more in larger valuations earlier in the cycle. Do you think there's a risk to that behavior, and what's changing? Is it that banks are doing less due diligence, or VCs are doing less due diligence, or is it about the fact that there are now more interesting companies, the client or end consumer understands them better? So
Ian, the question you're asking is, people are raising more and more money earlier and earlier. Was that the question that you asked me?
I know that's true. I guess what I'm asking is, what's the cause of that?
Why is that? Yeah. I just think that it's expensive. I think that it's got more expensive. I think talent is more expensive. I think customer acquisition costs have risen exponentially since you started doing this. I think the competitive set is expensive. I think dealing with the fragmented nature of the market means it's also expensive. So I just think there are lots of reasons why you need more money to get to the same point that perhaps you needed less money to when we started Beam in 2012, 2013. That fintech wasn't even a thing, and people, we were kind of, and it just wasn't even a space out there, right? In terms of where it is right now. So I just think that but now you're launching into a market with competitive set, and it just requires much deeper pockets in order to get the same sort of traction that you could have done 5 or 6 years ago with less capital.
Yeah, and do you agree with that, Nabil?
Absolutely. At the same time, we're seeing funding available at different stages. So it is available. I can give you an example, like in Saudi Arabia, the first quarter of 2022 is not yet over, and the funding reached $250 million. And you would wonder to see that, for the first time ever, we've seen amounts of $10 and $13 million as pre-seed. So this is
I'm not sure it counts as pre-seed at that stage, does it?
But it's very encouraging. It's very encouraging to the ecosystem, and I'm sure we'll see positive results. Not everyone will succeed, but it will definitely be supporting the whole ecosystem going forward.
Sure. So we'll go now, if we may, to the Q&A. And we've got a question here from Ahmed, and he's asked about Egypt and Nabil, perhaps you can jump in on that. He specifically asks, what do you think the environment or the ecosystem for innovation looks like in Egypt?
Things are very promising in Egypt. Egypt is now probably the second market in MENA attracting investments. We see a lot of innovation happening over there. We see a lot of support from central bank and coming up with new regulations supporting the fintech ecosystem. And we're expecting to see more announcements, to hear about more announcements in the next couple of months. So it's really an exciting market, big customer base to tap into, tapping into unbanked, very large unbanked community. So it is an exciting market, and this is why it has been identified as one of our core markets as well. We are setting up offices with teams on the ground, and we're double dipping, in that market. We're doubling down basically in that market.
So you talk there about unbanked communities, and obviously, as we know, one of the things that SANAD is heavily involved in is financial inclusion and microfinance. Do you see the value of those two propositions, and do you see them being, I won't say big business, because the goal is not always, of course, profit generation in those marketplaces, that you get a mix of for-profit, not-for-profit, third-party type of solutions. But do you see well, obviously you see a need that needs to be addressed, or a problem that needs to be solved. How do you kind of assess the scale of that problem?
Yeah, sure. Basically, I still recall when central banks started really looking at fintechs, they had only one objective in mind, which was financial inclusion. So the whole fintech mindset at regulators started from the concept of financial inclusion, because they started realizing the importance of including everyone in the financial, cycle. So definitely this is high on the agenda of central banks, and I see a lot of initiatives trying to solve for that, live already in multiple markets.
Yeah, excellent. There's a slightly different question here for you, Shazan, not entirely on topic, but I'll ask you anyway. Somebody's asked you, you've built and sold 4 businesses. How do you do it?
How do you do it? So I think it's a combination. So you need to, I think the first thing is you need to fall in love with the problem. That you need to really find a problem that you're passionate about solving. I think if you, so I look at it, so I've kind of thought about this a little bit, and I've kind of come up with a framework that works for me, that I use. And I call this, I don't know, I think I may have ripped it off from somewhere, but I call it the zone of genius. So anything has to be the intersection of 3 things. Any opportunity, it has to be at the intersection of 3 things: passion, knowledge, and opportunity. And if it doesn't have those 3 things, then you're wasting your time. You can't have 2. You have to have all 3 and a necessary and sufficient condition in order to have any chance of having success. So that's number 1. So definitely find a problem find an opportunity that's in the zone of genius. And secondly, never do it on your own. Always find a co-founder that you can trust. And trust is the intangible there. And so those are the 2 things that I would say are important to take away.
Excellent. Nabil, a question here for you. You've worked at banks, you've worked at Visa, now you're working at a fintech. Which did you enjoy the most?
So
possibly not fair.
No, I can tell you, like my desire and my natural next step after starting with banking and then moving into payments technology, was fintech, because it is a combination of these 2 in reality. And when I decided to leave banking, I was convinced that it is the right time to do so. There was major focus on payments and payments innovation and payments technology at my time with Visa. And now I believe it's the right time of combining both and, serving under the fintech directions.
Yeah, absolutely. Shazana, there's a question here. Sorry.
No, it's really interesting journey and interesting days ahead.
Yeah, absolutely. Shazana, there's a question here. You said you were an entrepreneur in residence. Excuse my tongue tie. Yeah. What does that mean?
What does that mean? It means that I spend time looking for problems that are interesting for me to solve. That's what it means.
Okay. Okay, excellent. That sounds like a good job.
Yeah. and then once I find it and there's alignment with the bank's strategic direction, then I have the ability to go out and build a proposition around that.
Fantastic. Okay, thank you very much. There's a few questions here that are a little bit strange. One of them said, do we think there's a bad market for fintech innovation globally? Anywhere that, I mean, we'll rule out perhaps North Korea, but anywhere else that you think, you know, they're just getting the regulatory piece wrong? You mentioned, yeah, or that's the wording of the question, but let's say
a hostile market, perhaps.
Yeah.
Yeah. I think how regulators are looking at the crypto landscape globally is not great. I think that they're approaching it as zero sum, which it doesn't necessarily have to be. I think that needs to change.
Yeah. Well, what do you think it is about crypto? Is it because as you say, it's almost always in the news, right? The SEC isn't going to allow this, or you know, Singapore won't allow crypto, South Korea won't allow mining, China won't allow mining, whatever it might be. It always seems to be
it's the narrative. It's the narrative. It's the branding. Yeah. Unfortunately, that's why we don't talk about crypto anymore. We talk about Web3. I mean, it's a semantic, but unfortunately, it's important. And I think that regulators are much happier with Web3 than with crypto.
What do you think caused that narrative? What's the starting point? Is it lack of understanding from?
No, it was from the crypto anarchist tradition. It was from the whole crypto punk tradition of where this came from, right? You know, the initial guys, the old OGs. If you meet, so I spent 2016, 2017 flying around the world, meeting all the OGs in the crypto world. And these guys wanted to burn the system down, right? They actually wanted to, when the revolution comes, they came from that. They think of, they viewed the world as zero sum between the legacy financial system and the new financial system they were trying to create that wasn't oligopolistic, that wasn't controlled and dominated by a few individuals in their mind. I'm paraphrasing their position, obviously, you know. So, you know, they came from that tradition and it scared a lot of people. And then you know, there was malfeasance at the beginning. You know, the Silk Road was that website. There was, you know, there were all sorts of examples where this, and then unfortunately crypto got tarred with this narrative that it was only being used for illicit activities and all this sort of stuff. And so, you know, it was paying off the back foot from that point forward. And, you know, they've tried to shift the messaging. But I mean, unfortunately, people have long memories.
Yeah. Are there any markets you think, back to that initial question that I asked Shazan, any markets you think are particularly hostiles are you know, fairly loaded web, but more difficult to operate in, and what's the reasons for that?
Definitely, different markets and different regulators are moving at different pace. So those that are really advanced are able to start showing, you know, the benefits of innovation in that space. Other markets, maybe due to a lack of stability or maybe slightly lack of awareness, they haven't really accelerated in that direction, but eventually things will happen. And one point on crypto and central banks, you know, the money controlling the world economy, and money is mainly used to transact, right? So probably what have created this concern and fear is seeing an alternative currency that by itself fluctuates. So they didn't really know what impact this might have on the economies and how the transactional environment, would occur. And don't forget that they need to have control and control FX and understand, the whole economy. How would it be impacted?
For sure. And I think there's an equation of all crypto with Bitcoin, right? In a lot of public perception, perhaps not for somebody such as you, gentlemen, who knows far more about it, but I think in the general perception that that is the case. And as you said, perhaps certainly historically, a lot of volatility. It looks more like a speculation tool than a currency for a while, although I think that is dampening down a touch. Gentlemen, thank you for your time. We do have a couple more questions, but I'm afraid we've run to the end of our time today. We'll try and get some answers to those questions from the panelists and get them back to you if you've asked them and they've been unanswered. But I want to thank my two panelists, Shazan and Nabil, very much for taking the time to sit with us, and thank you for your excellent contributions. I'd like to thank SANAD for being involved in the creation of these webinars and all the great work that they're doing around the world. And thank you, the audience, for showing up. My name's Ian Jenkins from Base 115. It's been a pleasure, and we'll see you next time.